Why are wealth managers constantly choosing crypto SMAs? We will be looking at the good side of this recent addiction. Stay till the end of the video as I will be covering how a separately managed account, SMA, can be beneficial to your firms and investors as well as tax-wise. Stick with me till the end to find out more. If this sounds like something of much interest to you, be sure to check out this new video starting now. Hello and welcome to our channel, where we talk about the latest updates from the world of cryptocurrencies in general. If this is your first time watching one of our videos, we extend a special welcome to you. We invite you to hit the notification bell so you never miss another video. Now, let's dive in. What are SMAs? An SMA is a portfolio of assets managed by a professional investment firm. In the United States, the vast majority of such firms are called registered investment advisors. These firms operate under the regulatory auspices of the Investment Advisors Act of 1940 and the purview of the U.S. Securities and Exchange Commission, SEC. One or more portfolio managers are responsible for day-to-day investment decisions, supported by a team of analysts, plus operations and administrative staff. SMAs differ from pooled vehicles like mutual funds in that each portfolio is unique to a single account, hence the name. In other words, if you set up a separate account with Money Manager X, then Manager X has the discretion to make decisions for this account that may be different from decisions made for other accounts. Mutual funds cannot offer, due to their structure as investments shared by a group of investors, the benefit of customized portfolio management. Separate accounts overcome this barrier. Say, for example, that a manager oversees a diversified core equity strategy including 20 stocks. The manager decides to launch a mutual fund investing in these stocks as well as a separately managed account offering. Assume that at the outset, the manager chooses the same investments and the same weights for both the mutual fund and the SMA. From a client's perspective, the beneficial interests in either vehicle are identical at the outset, but the statements will look different. For the mutual fund client, the position will show up as a single-line entry bearing the mutual fund ticker, most likely a 5-letter acronym ending in X. The value will be the net asset value at the close of business on the statement's effective date. The SMA investor statement, however, will list each of the equity positions and values separately, and the total value of the account will be the aggregate value of each of the positions. From this point, the investments will begin to diverge. Decisions the manager makes for the mutual fund, including the timing for buying and selling shares, dividend reinvestment, and distributions, will affect all fund investors in the same way. For SMAs, however, decisions are made at the account level and will, therefore, vary from one investor to another. Wealth managers are increasingly receiving client questions about investing in crypto and how clients can gain exposure to this asset class. Most financial advisors are unaware of the pros and cons of investment vehicles available to invest in digital assets on behalf of their clients. Over the past 12 months, 90% of financial advisors have received client questions about crypto. RIAs and financial advisors must navigate a range of considerations when allocating to this asset class, most notably around security and compliance considerations. Advisors must be mindful of the characteristics of each structure as they select the proper investment vehicle. The current options for financial advisors are: 1. Instructing the client to move assets away and invest self-directed at a retail crypto exchange, e.g., Coinbase. 2. Over-the-counter trust, e.g., Grayscale Bitcoin Trust. 3. Private funds, or 4. Investing through a crypto separately managed account, SMA. Separately managed accounts, SMAs, have been growing rapidly over the past 10 years in traditional asset class. Separately managed account AUM has grown from $550 billion in 2011 to $1.7 trillion in 2021. Wealth managers chose SMAs due to the key advantages of tax optimization, direct ownership, professional management, and customization. For those same reasons, the wealth management market is steadily adopting crypto SMAs as the vehicle of choice to invest in this emerging asset class. Below we break out why the benefits and disadvantages of using a crypto SMA for financial advisors. Advantages of SMAs. Please, do not forget to subscribe to our channel and also hit that notification bell to be the first person to get more updates about the latest happenings in the crypto space. Tax optimization. The crypto market is volatile relative to other asset classes, creating attractive tax optimization opportunities. When an investor utilizes a crypto SMA, an account is opened in their name at a digital asset qualified custodian, allowing the investor to own the digital assets directly. This structure enables tax optimization in these accounts unavailable in the OTC trust or private fund structure. Crypto SMAs often have a tax overlay strategy that will find opportunities to reduce or offset the client's capital gain tax liability, like traditional SMAs. Direct ownership. Direct ownership is the best structure from an investment vehicle perspective. There is minimal tracking error compared to other products, such as an OTC public trust, which can have meaningful premiums and discounts and, thus, tracking error. Further, there is 24/7 liquidity for crypto SMAs, allowing investors and advisors to sell or buy anytime. Reporting integration. Crypto SMA providers can integrate directly with wealth managers' reporting platforms, e.g., Orion, Adapar, Black Diamond, allowing advisors to model, report, and bill seamlessly on their clients' digital asset holdings. Professional management. In an emerging and complex asset class such as crypto, the expertise of professional management is even more valuable than traditional asset classes. An emerging asset class is difficult to keep up with to the extent needed to make proper allocation decisions. By utilizing crypto SMAs, an advisor can benefit from outsourcing digital asset portfolio management and trading to specialists with deep expertise in the digital asset market. Institutional custody. An advisor can use a crypto SMA to take advantage of an institutional-grade custodian in an emerging asset class. Given crypto security risk and compliance considerations, working with an established and qualified custodian is essential. Client assets are typically held at a custodian who maintains both a SOC1 and SOC2 from a recognized accounting firm, undergoes internal audits, and is subject to regulatory oversight requirements, including capital requirements, from the NYDFS. The institutional-grade custodian provides institutional cold storage, trading, and security. Tax benefits of separately managed accounts. One of the most significant benefits of separate accounts involves tax gain loss harvesting, which is a technique for minimizing capital gains tax liability through the selective realization of gains and losses in your separate account portfolio. Consider, for example, a separate account portfolio in which two securities have been purchased at similar prices. Over time, one of the securities has doubled in value while the other has fallen by half. By instructing the money manager to sell both securities, the gains generated by the security that has doubled in value are offset by the losses in the other security, reducing considerably any capital gains tax liability. The proceeds from the sale can be reinvested, maintaining the balance in your account. In a similar fashion, if you sold some real estate, art, or other investments at a profit, but have unrealized losses in your separate account, you could realize the losses and use them to offset the gains from the sale of your other investments. Given the account minimums, separately managed accounts are not for every investor. If you have the means, they can be a useful alternative to mutual funds or other pooled vehicles and more closely align with your own specific return objectives, risk tolerance, and special circumstances. To maximize the benefits separate accounts offer, most investors work with a professional investment advisor. The advisor assists with asset allocation decisions and money manager selection, as well as coordinates portfolio customization and gain/loss harvesting. Now, I'd love to hear your thoughts on this in the comments section. Write us anything down here, we are very eager to read you. Always remember that you are an important part of our community. With that, we come to the end of this video. If you enjoyed it, give the video a like and don't forget to subscribe. This really helps me with the YouTube algorithm. Also share this video to as many people as possible. Let's get this news everywhere. If you are a true cryptocurrency fan, don't miss any of our content and don't forget to follow us on our new Instagram account at FactMakeMoney. See you in a future opportunity to talk about the latest news that concerns us all as a community.